Well, hey, everybody. Top of the morning to you. It is June 7th, 2024 at 9:38 a.m. local. I just watched a cool podcast, Macro. Haven't been watching a lot of Macro lately. I think I kind of burnt myself out on it, if I'm totally honest, staring at it as I did for so long. A really important conversation that I've been wanting to watch happen for a while happened today. It was between a guy called Raul Paul and Brent Johnson. These two fellas sort of specialize in zooming out and trying to look at the whole thing. And that's a thing I like to do in just about everything. And so I've really valued their unique perspectives, but I have noticed not noticed, but I couldn't figure out where they agreed, disagreed, specifically with what endgame looks like for the euro dollar. Or especially with Brent, it's like there is no end game. Well, that's complicated. I'll get into it in a sec. I'm going to link in the notes of today's vlog this episode. It's called What Happens When the US Dollar Dies. It's in Raul Paul's The Journeyman series. And I think what I'll do is I'm going to read out a bunch of notes that I do this a lot of times when I want to keep track of important notions that I'm hearing in people's discussions. And so at one point I sent a text to my buddy Hirsch, who's been on this podcast a couple times. And because he's following along and trying to make sense of all this as I am, as we all are. And we've had a lot of direct discussions about it, specifically about trying to figure out how these guys are playing or positioning. That's what's so important. It's like, okay, you can have all these theories and everything, but what are you doing with your money? And what are you doing with money you're managing for other people? That's what I want to know. And Raul has been pretty straightforward about what he does, but I've never been exactly clear on what Brent's doing and how he thinks about it. This podcast was great for that. And so now from here I can go talk for an hour about it, and then that just creates an extra hour of burden of watch time. And because short attention spans are the hottest item these days, I'm going to try and keep it really short. What I'm going to do is kind of three parts. I'm going to first read all my notes without stopping and trying not to inject new comments to clarify. And then after that, I'm going to read them again and add a brief commentary that I'm going to try and keep under 10 minutes. The important insights I pulled out of it all. And then I'm just going to go long form, anything that occurs to elaborate on, and sort of how I'm thinking about these things today, etc. But it's been a long time since I've talked about anything financial and macro-y, so I thought it was a good time to do that here. So without further ado, these were my comments. I got about halfway in and I started messaging Hirsch. I linked him today's video that I just mentioned, and I said, I'm about halfway through this, but I've been wanting to hear these two sync up for a while now, that everything is looking a lot more clear. The critical bit about Brent's dollar milkshake theory is that all the other nations created and lent to each other in dollars. That's the part people don't understand. Equities, gold, crypto rise in the MST, the milkshake theory, not collapse. I was just never sure what Brent thought endgame positioning looked like. Seems like he agrees with Raul's everything code, I just think he might not see crypto as clear as you, me, and Raul. And that's cool. Then I added a follow-up text. I said 30 minutes, 40 minutes is the vital bit. If you already understand and have watched a lot of these two fellas' content, you can kind of like at about the 30-minute mark to about from 30 on, but especially that chunk. The key difference in their perspective is at the 43-minute, 30-second mark-ish. Raul, in parenthesis, and I see the energy / productivity, quote, miracle, end quote, as likely and sooner than people think. Brent sees it as highly unlikely. So lots more war and economic instability. And then I responded with one more text to Hirsch. I said, so are you an optimist or a pessimist? Joy emoticon. I think that's the key difference. And I've watched hours of these two fellows talk. Hours. And I've watched them tweet for a couple years now. I think that's the big distinction, is that 43-minute and a half mark. And I'll talk more about that later. Shit. I'm elaborating where I said I wouldn't. Okay, the other notes I wrote are that I shifted to just jotting down notes. I said 57 mark. 50. Wait. Let me start at the beginning. 57-minute mark. Quote, any system that has to grow will eventually become exponential, end quote. That was something Brent said. And then I hyphenated that and said compounding. At the 1 hour mark, Brent says the duality of money. Money can't be hard or soft. It must be both in perfect balance. And Brent said the duality of money. I added that other thing. Then the next comment I wrote is crypto is a move from what Brent describes just after a min or so, where money is whatever the strongest guy says it is, or the people with power decide what money is. And I appended crypto is a new kind of money that is open source and opt-in, where we all just kind of decide together. Next, I jotted down Raul's philosophy of money, by definition as scarce, is a real important point. It's a really important point. And then the last thing I wrote is that they both are quite confident that Dixie up is inevitable. And they threw some numbers around, 130, 140, 150, 180. I agree with that after looking at all of this for fucking years. So that is the notes. Now let me try and do in this first, or about 8 minutes in, I'm going to do another quick 10 minutes where I elaborate. Apologies, my dog's barking in the other room. So let's go back through those one more time. So going back to the text, getting about halfway through, and the critical bit about the milkshake theory is that all the other nations created and lent to each other in dollars. So a lot of people look at all of this shit and they say, well, clearly it's all going to break. And that's something these two fellows talk about quite a bit in the pod. But they draw conclusions that it must, like, they want to position out fully outside the system. Maybe they're all Bitcoin, all gold, or worse, I would say bonds. I mean, there might be a play where you can do something with bonds, but ultimately it's I could get lost in that. And I see so many other things that will obviously do quite a bit better. So it seems like a lot of risk for what is supposed to be the lowest risk asset in the Eurodollar system. So I'm not at all interested in those. I like where Brent took it to a place where buying Coca-Cola, that's fucking logical. Like that thing he said there about how equities in the United States are just such a no-brainer play for anybody who's managing a lot of money. So yeah, I think they just keep kicking ass. And that's complicated. There's a lot of reasons for it. And these days I try and do abstractions in my own mind, how I think about this. And when I think I have a good handle on how something works, I kind of create a label for it in the memory palace of my mind. And every once in a while, I go back and look at that label and make sure that I don't need to tweak any of the data that I've got boxed there. So then, Max, go lay down. So why do that? It's because there's so much complexity to all this, and if you want to zoom out, you kind of have to create these categories, and there's these whole groups. There's something that Brent said later on about sort of dialectic thinking and being able to get yourself to think like somebody else. Almost nobody can do that. It's like it's a super rare skill, and most, like the hard money camp, they're just sure that Austrian economics will solve everything. And then the modern monetary theorists are just the other side of the coin, just sure that they're right about everything. The truth is, just a soup of both is vital, and you can't do either without the other. And then the balance of, managing that dynamic between the two is where I think we can get better, and I think crypto will do that. I think crypto gives us the ability to attach a lot more controls that are sort of automated and triggered by sort of new economic metrics that we find that are sort of universal in how they address adjustments to base rates and things like that. A long time ago, I did a podcast about this time last year or something. I called it SCP Cheers. And I tried to make these topics fun in some way. And I did it by imagining an episode of a really popular 80s TV show I grew up with, Cheers. And I sort of imagined myself walking into the bar at Cheers, sitting down with Sam and Woody and Frasier and Norm and Cliff, and having a conversation about central bankers and how the Eurodollar works. And at the time, see, this is where another superpower past dialectic thinking is, and I'm going to have to pause this because my dog just decided to get totally out of line. I'm back. I think I got him squared away. We'll see. So I was just talking about superpowers in macro investing, dialectic thinking, being able to look at both polarities, the bulls and the bears, give them equal attention and focus and open-minded consideration. Superpower. That's what these guys are doing. That's how they zoom out so far and see, where all the default behaviors in the system that are sort of inevitable, that regardless of what either camp wants, kind of has to happen. Another one is just being able to be super humble and happy to be like, oh, I was wrong about that. Like I'm really like, I love that. Like one of my favorite things to do is spot a flaw in my logic or my thinking and then go, oops, you know, I effed that up. So right around the time I made SCP Cheers, I was learning about the Eurodollar system. I spent hours watching Jeff Snyder on Eurodollar University. And at the time, I was just starting to really get a sophisticated, compared to my prior understanding, a sophisticated understanding of how dollars work outside of geographic United States. Almost nobody gets that. And it was really complicated to wrap my head around in the beginning, but now it's pretty simple. I mean, it's what Brent said at that at one point, or it's what they both said and agreed to, is that all the other nations have been using the US dollar to lend internally. So even if we went to war with these countries, which is all of a sudden happening in all these funky ways right now, it's like it's not. I think that there's a misunderstanding from most Americans or people that think about these things that, like, the BRICS nations could just opt out and decide not to pay off their US debts, like opting out of the Eurodollar and adopting their own currency, which looks like the digital yuan, or even gold and for oil. They cannot opt out of the Eurodollar because a bunch of their own economies and vital interests, like there are businesses in China and Russia and Europe and all these places that borrowed US dollars and lent them to people within their country to make stuff. And if they chose to just bail on the dollar and be like, yeah, F the US, they're all assholes and they don't care about us, which is I won't dig into, they would crash their own economies, because their own economies are, well, and that is not the full view. There's all of what they described about how they manage their own currencies and their pegs against the dollar. But the dollar is, love it or not, we needed a global currency. Everybody went for it. And it made a lot of sense for a lot of reasons. And it's why so many really cool things have happened with our technology. And I would say also just pulling a lot of people out of poverty. If you look at global poverty and starvation and how our population has grown, and yet the ratio of the ones that are in complete poverty has been on the decline. I like this Eurodollar system. I think it totally worked. I just think that it had it had an expiration date that was unclear but inevitable, baked into the cake from the beginning. And that's where, and now we're at the place where further in their conversation, they got to this, I wrote a note about it. It was when think it was Brent's, the duality of money. Money can't be hard or soft. It must be both in perfect balance. No, it was at the 57 mark. Any system that has to grow will eventually become exponential. There's compounding built into it. So everybody wants to pick somebody to be pissed off at. They want to say it was your fault. There wasn't an alternative. We'd been doing all these other systems that, if you look at history, just consistently failed at like an 80-year cadence. And it's because the problem space is so complex. It's like you're trying to create, like in money, you're trying to create this sort of valueless, scarce thing that you price everything in. So it needs, on a certain level, to have a fixed supply. And every time we've tested completely unfixing its supply, that fails over and over and over and over again in history. And if you go with a hard money standard, like the pure gold standard, they describe it. Farmers start losing their farms because there's not enough money to lend all the farmers to buy the seed they need. And that's just one tiny, very important part of the global economy. So I find it's just a really healthy perspective to not be mad at anybody for any of this, and to in fact be quite grateful for all of the good that's happened. And then I do need to keep the lights on around here, and I need to keep myself out of a cubicle working for a corporation on some silly thing I don't believe in. So I have to pay attention to this stuff, and I have to sort of position in certain ways. But I'm certainly not mad at anybody for it, and I'm not ever sure that I'm right about everything. And yeah, item 2 on my superpower lists in macro is humble, like open-mindedness and willingness to be wrong. That's a consistent theme that's come up. Raul's talked about that a bit on his podcast. And it's just, it'll serve you so much. And I would suggest Stoic philosophy if you want to invest. Your losses become hilarious and opportunities to have less losses in the future. So, I don't know if I need prattle on about any of this stuff anymore, but I've listened to these guys talk, and I've listened to everyone talk in macro for a few years now. I made it sort of my full-time job to just absorb like everything coming from Real Vision, everything coming from Blockworks Macro, everything I could find that these other people that would go on those shows, if they would go start their own shows. There's a dozen of these. There's Wealthion, there's Scaramucci's got his own channel. Watch all these. I know all the people. I know their personalities. I think I have kind of a handle on some of their blind spots, and some of they all have a lot of strengths and a lot of really valuable insight they can give you, especially while you're trying to learn all the different components of it. But ultimately, I think I'm very close to where Brent and Raul are in their thinking, but then it just came down to like positioning, and I didn't understand why Brent was so closed off to like crypto. And it really came out in this, like towards the end, it was they both kind of were trying to look for distinctions in their two macro views. And I really think it's a function of the market that they're addressing, so Brent manages other people's money or advises. And so I think when you do that, you have to take a much more conservative tack, which requires you to be much more dialed into bonds and commodities and geopolitics and Fed behaviors and all of that. And that is a massive time suck. And then you have Raul, who's created a media platform for macro and crypto information that's focused on understanding emergent tech and crypto, new monetary, and technology. So he's talking to all of these, they're both talking to very different subsets of the global economy, and they're very focused, even though they have a real simpatico view on how we got here, where here is, and where we're likely going. The major distinction is Raul spent a bunch of time studying the tech and crypto and all that, and Brent's looking at something that's a lot more conservative play. So that sort of stays within the guardrails of the old system, and it hedges using things like gold because he's managing boomer money. I think he'll do quite well. like I wouldn't disparage any of what I heard Brent say, or how he plays this will probably work quite well. But before I went and taught myself all the macro stuff and listened to the Brents and the Jeff Snyders and the Green, what's his name? Mike Green, there's all these guys. You just obsess on this every day, and it's awesome because I'm just so grateful for everything they've taught me. But I came from technology. My superpower, what I bring to macro and investing is 20 years in the software business, hiring really expensive engineers. So I know what they sound like. I can listen to the conversation that happens in crypto and get to that. Like Solana was the no-brainer play back before their mainnet launched to me, because I listened to every no sharding podcast. I watched all these whiteboards of the near guys with Anatoly Yakovenko, and I will listen to all the debates of the engineers, not the bankers and the finance, all the guys who are locking up TVL and Ethereum because they're just sure that that's the legit play. My edge that I brought is I know scale is everything, and engineering, you cannot dismiss the complexity of like a distributed consensus system, and how complicated. Let me break this down in a different way. I've worked on projects where we could hire engineers that were right out of college that didn't have much experience and were paid sort of at the bottom of the engineering pay range. And those type of engineers, I could point at Solidity and build a sequential transaction processing app with EVM. And that would be just fine, but it would never scale to any users. Like we could use that type of work for like in-house projects, or, if it was solely created by a group of engineers that are in that that range. But then there's engineering has this entire range, and the ones like Anatoly Yakovenko that worked for Qualcomm for 10 years and understand scaling TPS and scaling throughput and load with hardware, and why he needed to engage the Jump Crypto folks with Fire Dancer once the ball started getting rolling, he saw that because he knew there was opportunities to optimize the SVM and the not the SVM specifically, but the validator client that the Solana Labs team created. He knew, oh yeah, we can find these guys that do high frequency trading, and they'll go rewrite the whole thing in C, and then it'll just be it's like an engineer like Anatoly, you're going to have to pay back when I was doing it, like probably 5 times as much as the first engineer that would work on EVM, because the knowledge, experience, and design, like ability to architect a system that can scale to billions of users, costs more. And it's far more rare. And when I watched the people in all of these, I will listen to the Avalanche guys, I listened to all the early conversations, and I listened to specifically the founders. No Sharding was great because Toly invited founders onto his show to talk about the differences in their systems. It got me to understand the people. And I knew that that was a ridiculous edge, that almost everybody in crypto was either old money crypto. They bought Bitcoin early, and so they had a bunch of money, and so everybody listens to them. That's like the up only crowd, and then you had the finance guys. That was crypto before like 2017. And then after that, the engineers showed up, and the engineer investors like I'm forgetting his name. I have a funny story about him at one of the Solana conventions. It'll come to me maybe. But there's a bunch of people that showed up into crypto around the 2017 run up and collapse that were engineers. And engineers, they were able to go in and go see the whole crypto landscape and then identify how to actually scale it. And a lot of them invested, not Armani, what's his name? Kyle Sumani, and Tashar. That crew, and for whatever reason I'm spacing the name of their, that's the crew you want to listen to, guys. They're the ones that are, and really like the what's his name? He was at Microsoft for a while, and I totally follow this guy. Let's see here, because it's worth mentioning. He tweets all the damn time, I'm sure. I can find him here. Yeah. I could get Twitter working. Joe McCann. Guy who understands trading, finance, and comes from a guy who can pull the code from one of these repos and walk through it. Those guys are the ones you want to pay attention to. And most of the dialogues in crypto right now are still around, like which, for me, as soon as a layer 1 got network effect that could scale with hardware and handle world scale TPS, it was pretty much a decided outcome. And now, for me, that was just obviously Solana from my background. And it's really tough to get people to see that, especially when nobody's paying attention to the people with my background, or Joe McCann's or Kyle Sumani's back in 17. Nobody paid attention to us. Well, people pay attention to those two guys. They're much smarter than me and more important and stuff. I'm just a guy who watches a lot of YouTube, really. But I do have that background. And before this grand experiment of just pouring as much information into my brain as I could on all these topics, that was where I came from. And so when you jump into any place where you're competing or you're taking on risk, you kind of have to leverage your skills and your assets, and that was my main asset. So in crypto, I think that my feelings on that haven't changed. There's only a few up and comers after Solana that I think have a shot. I think this is not popular in crypto still, but I think EVM is and anything in the Ethereum ecosystem eventually fades. And we'll see. Maybe there's a space for it. Maybe I'm wrong about that. I love saying, oh shit, I was wrong about that. But right now, I definitely still see, like, if you're going to invest, like, even if I am wrong about that, I still see that the market cap of Ethereum versus Solana is way offsides, out of position for what it needs to be. Now, will eventually Solana just eat up the world for being the layer one solution that we all use? I don't know. We'll see. I could be wrong about that. Maybe there will be a place for it. But about the only thing I see that Ethereum might be able to do is being sort of a niche NFT market. I mean, that's the only thing I really, once we get to real scale, and I'm talking like, there's a stat came out day before yesterday that Solana just last month did 500,000 coins launched on Solana. That matters because when like BlackRock talks about investing in Ethereum and setting up an Ethereum ETF because they see the tokenization of all real world assets as inevitable, and they're trying to get ahead of that trade. It won't happen in a place where it costs $1 gazillion to do that. You want to go to the place where you can do it. You can spin up a token for nothing, where Izzy Azalea can spin up Mother meme coin, and it's trivial. There was a funny tweet I saw Joe McCann put out yesterday about how Iggy Azalea, she released this tweet that said it was kind of the mid-curve, sweating finance crypto guy saying, you didn't even read a white paper to launch, or you can't. I can't remember what it was. It was funny, and then it was Iggy Azalea saying back, "Well, suck my dick, I did it." It has to be that easy. And I don't know, there's this temptation to think that somehow that's creating that the network effect and chain activity that we see in Solana is somehow fake, because it's all stuff like that. But I think what you're not seeing the forest for the trees. You're not seeing the fact that why is it happening there and not anywhere else? Because it's easy and it can do it. Nobody else has that. And nobody else has the, critically, even if you have a network, or even if you have a layer one, if you're Aptos or Sui or one of these other ones, or one of the layer twos for Ethereum that might be able to handle it, like just the throughput for that kind of demand, you're not as battle tested. Everybody picks on Solana for their outages, but it's because they said, well, there's no way you can avoid, like, you don't release complicated software like this without bugs, and we're just going to do it, and we're going to get through it. And they're through most of it, and nobody else is. And they have experience dealing with outages. They know what to do when they have to restart the chain. Nobody else has that. And they have a development environment where there's all these tools that let Iggy Azalea, with probably her tech friends' help, go spin up a legit meme coin that they're now saying might be worth $1 billion market cap soon. It's gone from like half a penny up to 19 cents. And as ridiculous as you might find the whole thing, had you bought it on May 31st, I didn't. I'm like burned out on this whole thing. But I still watch it kind of and laugh along as it happens. If you had bought 10 grand or even $1,000 in that mother coin on May 31st, I think it was like 0.004 cents. And today or yesterday, last night, when I looked at it, it was at 19 cents. That happened. That will likely continue happening in all kinds of cool, wacky new ways. And it's inevitable. And you can sit around and be pissed off at it, or you can figure out how to educate yourself and on it, some of its dynamics, and ride that train somehow. But that's a wild one. I'm not doing that. I'd rather bet on no-brainers like Solana. And I still think the largest NFT community is on Solana now. It's just the old money crypto and the finance guys that are trading the Ethereum ones. I think at some point it circles back, and I think the early NFT in Solana probably does insanely well, because you can't make a new one. And so, yeah, I have a couple sort of light blue chip Ethereum NFTs because I understand that people love collecting things, and it just seems like a no-brainer to just hang on to that stuff as like an out of the money call. But I don't really invest anything in Ethereum, layer 1s, layer 2s, and none of this is financial advice, of course, and fucking I don't know if I'm right about any of it. I just do the best I can, and I find that I can't find anybody who's been watching this all as closely. And so I don't really, like, I will let other people inform my opinions, people that I see watching the stuff as closely as I have for as long as I have. But so far, trusting my own gut has been the right approach. So I don't know that I'll ever really talk about money, macro, financial, global economy stuff anymore, because I just don't want to, and I'm not that into it. And I would say the last big one I did that I will link in the show notes, my SCP Cheers. In hindsight, when I look at that, well, I like it. It makes me laugh. I mean, you have to be a real macro geek to enjoy that. But I would say what I had wrong is I agree with Brent and Raul in this conversation that the Fed is not dumb. And I kind of alluded to the fact that they are. I just thought that I like the idea of adjusting the base rates out of the hands of like 300 people who've convinced themselves they're smarter than everyone else. I think those 300 people are very smart, though. And I think that they will do very well at ensuring that they get the most length they can out of the Eurodollar system, and that they see that the U.S. the central bank's interests are addressed always, and they will get that better than almost anybody. And you got to respect them for that. And I think Raul and Brent had a very good point towards the end of their conversation, that you can not like the Fed or the central bankers, and you can call them evil and all that, but it's like the alternative is all of this, especially the alternative from what we have today. I'm not talking about baking up a new system from scratch, like in crypto land, but taking the Eurodollar that's been managed by the central banks and the Fed and the Treasury and all these, I think if you just took them out of it, the whole thing would just fall over way quicker and more dramatically. If anything, the central bankers and the Fed are actually getting us more and more time through their forever can kicking. And I don't find any of it evil. I just think that there wasn't a better option, and the world tried a truly global economy after World War II. That had never been done before, and what we came up with was the Eurodollar, and I think it's like the coolest Jenga tower ever. And I like kind of love it. Like, I'm just kind of like, I look at it and I'm like, what they were talking about the 2008 financial crisis and how serious it really was, and how we were like this close to Mad Max, and how we just keep finding ways to just stretch it out and stretch it out and stretch it out. I think it's remarkable, and it's sort of endlessly fascinating when there are dramatic events to see how the creative ways the Fed, the Treasury, the central bankers figure out to just make it go a little bit longer. Yeah, we can get 10 more years out of this collapsing thing. And I think Brent's not wrong that it just kind of doesn't. It just keeps going because it has to, and it's so interwoven and interconnected in so many things. But I don't know. I'm prattling on at this point. I just thought it was fun to come back to this now. And the first 10, 15 minutes, what I had to say is really what I wanted to say this morning. I was really interested in figuring out how Brent and Raul's perspectives diverged and why. And it really, like, the fact that Brent has not spent the time to go look at all of the massive benefits that we get from crypto and tech. Like, he's not focused on that. So, and he doesn't, like, it's harder to see where you get not just 10x, but at like 1000x and 10,000x gains in functionality and performance and stability in this new emerging monetary system. And I think it's really normal that we all look at new stuff and go, oh, that's gonna fail. It's all a scam to get your money. I see an industry that has now more than 1 million people actually actively engaged and interacting. And if you look at all of the network growth, it's just growing. And it's definitely, you guys, it's definitely not, we're not going back to a gold standard. We're not going to the ruble or the yuan. And failure is kind of baked into the cake of the Eurodollar system. It's just going to stretch out longer. And there's a lot of ways you can play it, I think, in my view, where you do quite well knowing that. And don't listen to me. I'm just some vlogger. But these guys' conversation, I think, is really good. And thank you, fellas. I enjoyed it. I enjoy all your shits. That's it for today's show. Party on, everybody. Cheers.